Hello students, you are the future chartered accountants of India. Till now you have discussed with regard to the tax rates applicable for individuals. From today we are going to discuss with regard to the tax rates applicable for other categories of persons. Today we'll aim to complete this chapter by today itself. Don't worry, we'll complete as soon as possible. Okay. Before starting this today's classes, a very humble request: if you are not subscribed, please subscribe to my YouTube channel. This is Abhijith Acharya welcoming you for today's class, Abhi CA Classes. Okay. First of all, tax rates applicable for cooperative societies. The slab variation is there. Total income is up to rupees 10 lakh, that is 10 lakh or less. Then rates is applicable is 10% of the total income. Let's say for example, if your income is, let's say for example 9,000, then the rate applicable is 10% on 9,000, that is 900, right? Next, total income is more than 10,000 up to 20,000, then tax amount is 1,000. The earlier one actually up to 10,000 cover 10% 1,000 plus 20% of the remaining. Let's say for example 12,000 is your income, up to 10,000 10% 1,000, remaining excess of 10,000, that is 2,000, 20%, that is 400. 1,000 plus 400, 1,400 will be the tax amount that for cooperative societies, right? Next, total income is more than 20,000, then 3,000. First 1,000, next 10,000 ka 20%, 2,000. If you add both two, then you will get 3,000 plus 30% of the income above 20,000. Let's say for example, if your income is 30,000, up to 10,000, 10%, 1,000 amount. Next 10,000, 20%, 2,000 plus 3,000 हो गया. Next 10,000, right? Because your income is 30,000. 20 to 30 होता balance होता है 10,000 का 30%, that is 3,000. 3,000 plus 3,000, 6,000 is the tax amount that the cooperative society is liable to pay to the income tax government. Understand? Same as special rate of income is applicable for individual and HUF and other categories, the same special rate of income is also applicable for cooperative societies, but different sections. Under section 115 BAE, in that 115 BAC, a manufacturing cooperative society, the cooperative society should be manufacturing unit, a resident in India, that the term resident is very important, which is set up and registered on or after 1st 4 2023. This is the latest amendment, and that is important, and commences its activities on or before 31st March 2024, that is on or before the completion of this previous year. Then for that cooperative or those cooperative societies, the tax rate is 15%. Above slab rate is not applicable, 15% is applicable flat. Then under section 115 BAD, in case of other resident cooperative society who wants to avail the another special rate of benefit, the tax rate is 22%, not 30%, 20%, 10%, 22% flat. But in order to claim these two special sections, they had to forego some of the benefit, right? For example, deduction under section 10AA and 33AB and 33ABA, 35 1 2 2A 3, 35 2AA, 35 AD, 35 CCC. Next, additional depreciation. Next, chapter 6A, deduction other than section 80 AA, and set off of losses and depreciation brought forward from earlier year, that also need to be foregone. Next, amount AMT, that is not amount, AMT provision and brought forward credit also not available. It's our okay. These sections we have already covered under 115 BAC that were applicable for individual HUF and AJP, BOI, that is etc. But this is these six conditions is applicable only for cooperative societies. These respective points will discuss in detail with in the respective chapters. Okay, don't worry. After completing every chapters, you can again come back. I will suggest you to come back again and to read this provision once again. Then there will be at that point of you will be in a better position to understand. Okay, next up. Special rates of capital gain under section 112 that we have already discussed, 20%, 112A, 111A, that is long term and short term respectively, would also be applicable for cooperative societies also. There is no restriction that capital gain, the cooperative societies had a capital gain in terms of these sections, the same sections rates will be applicable accordingly. Okay. Next, surcharge rate is also applicable for co-operative societies. What you may surcharge? Tax on tax. For example, if a total income is crossing 1 crore, up to 1 crore, no, crossing 1 crore up to 10 crore, then the surcharge rate is 7% on the tax amount. Okay. Next, total income is exceeding 10 crore, then surcharge rate is 12% on the tax amount. Okay, first 7% you need not to calculate once again. Flat 12% on the tax amount if the cooperative society's income is more than 10 crore. Okay. Next, if the cooperative society is opting for the special rate of tax regime, that is 115 BAD, 115 BAE, then 10% flatly. There is no threshold limit. There is no threshold limit of 1 crore and 10 crore because they have been given a special rate of income, right? Income tax, right? So hence we have to add surcharge rate also simultaneously in addition to the tax amount. There will be no threshold limit. Keep it in mind. Very, very important. For those who are not opting, the surcharge rate will be applicable based on their threshold limit. But if they are opting for 115 BAD and 115 BAE, the tax surcharge rate is 10% flatly. You need not to see any of the income criteria. You need to add surcharge of 10% directly. Okay. This is applicable for cooperative societies. Now we will see the companies tax rates. First category, domestic company. The meaning we have already discussed, the domestic company. The total income or gross receipt of the previous year 21-22 is up to 400 crore. Remember, it is not 23-24 previous year, it is not 22-23 previous year, it is 21-22 previous year is up to 400 crore. The up to means 400 also inclusive. Then the tax rate is 25%. In other cases, that is crossing the 400 crores in 21-22 turnover, the tax rate is 30%. Remember, special rates are also applicable for domestic companies also. The domestic company there should be a manufacturing company set up and registered on or after 1st October 2019 and commences its manufacturing activity before 31st March 2024. This is this previous year. Then section will be 115 BAB, manufacturing unit. The rate is 15%, not 25%, 15% flat. And any domestic company, 115 domestic company, that should be domestic company if they wants to avail the another special rate of section, that is 115 BAA, that is 22%. But this is the benefits given to the domestic company, right? But for that they have to forego some of the benefits. Deduction on section 10AA, 33AB, 33ABA, 3512, 283, 352AA, 35AD, and 35CCC. Then additional depreciation. That's chapter 6A, deductions other than 80JJAA. And set off of losses, depreciation brought forward from earlier years will also be foregone. What are these? We'll see in respective chapters, because as of now I think it will be a bouncer to you, and hence I would suggest you to come back again after completing every chapter. Okay, I would suggest where it will come. And surcharge also applicable for companies, domestic companies. We are now talking about domestic companies. The total income is more than 1 crore up to 10 crore, the same 7%. The total income is 10 crore, crossing 10 crore, then 12%. If they are opting for 115 BAD, BAB and 115 BAA, special rate of income, then flat 10% should be added. Surcharge rate should be added to the respective tax amount without seeing any threshold limit. If they are opting for one of a special rate of income, we should not see any. They are total income. If they are not opting for one of a BAA and BAB, then we have to see the total income criteria. Understanding the same concept. Then, if they are foreign income, what is the rate applicable for foreign income? Involved in rendering technical services with the government of India or central government. Okay. If any foreign company is involving in rendering the technical service, that is professional services with the government of India, then tax rate is 50%, very huge for foreign companies. Other cases 40%. If they are not rendering any technical services, if they are only involved in any of the trade in India, then the rate applicable is 40%, very huge as compared to domestic company, because Make in India concept, I think. Then surcharge applicable is for the foreign company, the surcharge rate is applicable very low because they have been charged a huge tax rate amount, right, 40 or 50. So hence, Government of India wants to give a smaller benefit for them. So 2% of the surcharge, the total income is more than 1 crore and up to 10 crore, and 5% in case of more than income is total income is more than 10 crore. Surcharge rate is very low, but tax amount is very high. In case of domestic company, both are equally below. Okay. Note, special rates of capital gain under section 112A, 112, 111A that we have already discussed would also be applicable as usual. Simple. Companies का हो गया. Next, tax rate applicable for firm, LLP, local authority on the whole income, 30% of the tax amount. 112, 112A, 111A would also be applicable simultaneously for these persons categories. Okay, surcharge is if they crossing 1 crore, 12% is a surcharge, not 10 crore. There is no surcharge applicability. If the entire income is more than 1 crore, 12%. That's it. Okay. I hope you have understood like till now. Next, marginal relief. So what do you mean marginal relief? First, it is applicable for all the SSEs. The basic definition is where total income is little bit more than the slab rate. For example, 50 lakh. If you cross, if I am having an income of 51 lakh, I need to pay a tax amount along with the surcharge also, right? So, where my income is little bit more than 50 lakh, 1 crore, 2 crore, 5 crore, or in case of company 1 crore or 10 crore respectively, then marginal relief will be applicable. Government of India wants to promote the tax rate applicability. They need not to pay any higher rate of surcharge because by exceeding 1 lakh amount from 150 lakh, they need to pay a surcharge of 10%, right, on the tax amount. So, and hence the Government of India is giving marginal relief for those SSAs whose income is little bit more than the slab rate applicable. For example, my income is 1 crore 1 lakh, little bit more than. If marginal relief would not be there, then I need to pay a surcharge of 15%. Understanding, right? And hence they have given a marginal relief concept. There is one formula. You have to strictly follow this formula in an examinations also. Keep remember. Step 1. Compute the tax on total income and applicable surcharge rate. For example, in my case is of 51 lakh. I have actually included one of the example. Okay. You can see first A. Income tax on the total income of 1 crore 1 lakh. It is little bit more than 1 crore. And hence we have to pay the surcharge of 15%. So this will be huge, right? First step is we have to compute the tax rate applicable for 1 crore 1 lakh. If he is opting for new tax regime, up to 3 lakh nil, 3 to 6 lakh 5% 15,000, 6 to 9 lakh 10% 30,000, 9 to 12 lakh difference is 3 lakh into 15% 45,000, 12 to 15 lakh 20%, that is 60,000, then 15 more than 15 lakh 30%, up to 1 crore 1 lakh is the amount, right? Then the tax rate is 30%, that is 25,000, 25 lakh 80,000. The total tax amount is 27 lakh 30,000. But surcharge is 15%. If you add the surcharge rate applicability on 27 lakh 30,000 into 15%, 4 lakh 9,500. If you add all three, 31 lakh 39,500 is the tax amount that I need to pay to the government. This is the first step. Second step is compute the tax on slab. For example, in this case, 1 crore is the slab, right? If my income would have been 52 lakh, the slab is 50 lakh. I need to calculate the tax on 50 lakh. In this case, I need to calculate the tax on 1 crore. The same thing except 1 lakh you have to exclude. Okay, surcharge is 10%. In this case, surcharge rate is 10%. Why? Because if your income is crossing 50 lakh to 1 crore, the tax surcharge rate will be 10%, right? So 10%, that come to 29 lakh 70,000. Okay, next to C, total income minus slab income. For example, if total income is 52 lakh, slab income is 50 lakh, right? Just a little bit. Then the difference is 2 lakh. In this case, 1 crore 1 lakh minus what? 1 crore is a slab. That is amount to 1 lakh. That is the difference. C. Next step 4, step 2 plus step 3. If step 2 is, in this we have got 29 lakh 70,000 plus 1 lakh, that is 30 lakh 70,000. Okay. Next we have to add, that's actually marginal relief. We have to see the marginal relief. If step 1 is less, for example, if step 1 minus step 4, that's it. In this step 1 का आंसर होता है 31,39,500. Step 1 minus step D. Here 30,70,000, 70,000, right? Yes. 31,39,500 minus 30,70,000. If you deduct those three, then you will actually arrive at a marginal relief of 69,500. That's a relief that you need to deduct that amount from that step 1. That is actual liability would be simple. 30,70,000 plus 4% add, you have to add next. After computing the marginal relief, you have to add the what you says. What you may says we will discuss in clearly in the next upcoming slides. 30,70,000 plus 4%, 1,22,500. Simple. How 69,500 arrived? First step minus the fourth step, that is 30,70,000. Amount come around 69,500. Okay, this is the marginal relief. We'll revise once again. Where it will be when actually in what point of time it will be there. I would say it will be applicable when the income of your total income is little bit more than your slab. Little bit, for example, 2 crore 2 lakh, 2 crore 3 lakh, but you need to compute. Remember, step 5 says that step 1 minus step 4 should be always be positive. If it is negative, then marginal relief would not be applicable. Remember, very, very, very important. Step 1 minus step 4 is, if it is positive, then only that marginal relief will be applicable. If it is negative, then you need to capture, then marginal relief would not be available. Step 1 will be the ultimate tax amount, for, actually excluding the excess amount. Okay. Next, we'll see the rebate concept. Rebate for resident individual. If you hear the word rebate, you first thing that point need to be come to your mind is it will be applicable for resident individual. The says under section 87A, if they are opting for section 115BAC, that is new tax regime, the total income is less than or equal to 7 lakh. If my income is less than or equal to 7 lakh, then rebate will be applicable. And rebate shall be actual tax liability or 25,000, whichever is less. Simple. Whichever is less. Then if you are opting for normal tax regime, old tax regime, if my income is only up to 5 lakh, then the rebate will be applicable. Rebate shall be actual tax liability or 12,500, whichever is less. In income tax, everywhere you can see whichever is less only. Okay, whichever is less, because it will be burden for us, it will be beneficial for government of India. Okay, note, the rebate is allowed before adding health and education cess of 4%. Okay, rebate is allowed before adding health and education cess of 4%. What do you mean by health and education cess? After computing the final tax amount, you need to add 4% of health and education cess. Okay, then only that final tax amount will be arrived. If it is not rounded out, we have to round it up to ultimate rounded up to the nearest multiple of 10 that we have discussed in section 288B. If you have forgotten. Okay, then rebate is allowed before adding HES health and education cess of 4% respectively. Then rebate is not allowed for LTCG under section 112A, even though income is below 5 lakh or 7 lakh respectively. For example, let's say I am opting for new tax regime. I am having a 6 lakh rupees of LTCG under section 112A. What do you 112A? Up to 1 lakh it is exempt. More than 1 lakh, for excess amount, the 10% tax amount is tax rate is applicable, right? For that, rebate is not, you need not to consider for rebate. Only exclusion for rebate is if an SSC is a non-resident, then rebate will not be applicable. If SSC is having a special income under section 112A, that is LTCG, then also rebate is not applicable. Remember? Understood? Super. Next, we will see the agriculture income. This will be a last portion of this chapter. What do you mean by agriculture income? if you are receiving any rent from agricultural land, if you hire some of the land to on agricultural purpose, only for agricultural purpose, then the rent receiving is treated as agriculture income. Next, income from sale of agricultural produce. We have mentioned note 1. We will see the note 1 next. There we have mentioned that. And rent from houses, dwelling houses or store. If you store any of your agricultural produce in your godown, then if you have any rental income from that, then also that income will be treated as agriculture income. And income from nursery. Nursery means not children nursery. Nursery means the where plants and seeds will be stored. You might have seen the nursery. Okay, from that income also it is treated as an agriculture income. Okay, next note 1 that we have seen income from sale of agricultural produce. Sale in a raw form. If your agriculture is if your agricultural produce sold in a raw form, for example, raw form is tomato, or actually raw form means in the sense you have cut out that agricultural produce as you should sell as without having any process necessary for that. Sale in raw form. If it is sold in a raw form, then it is treated as agriculture income. If it is sale after process, for example, potato, if there dust is there, if you want to if you want to remove that dust, then there will be some process. If the process is compulsory for sale, if the potato needs to be sold with a clean, actually in a clean clean condition, then if that process is necessary, then it is called as agriculture income. If the process is optional for sale, for example, if you are selling potato, if you are selling that if you are option, it is actually optional. For example, cutting of the potatoes for the manufacturing of chips, potato chips, Lays, Kurkures, etc. That process is optional, right? You can sell, if there is an option to sell that agriculture produce in the normal form, then that is called optional for sale. If that is optional for sale, then we have to categorize that income into agriculture income and business income. Understood? What do you mean how to actually arrive at the agriculture income? In your question, fair market value of agriculture product after further process will be given. For example, in this case, if the potatoes are used for making potato chips, then potatoes market value after further process will be given for your examination question. That you need to consider. That needs to be deducted. From that, you have to deduct the cost of agriculture product. The cost of agriculture product is in terms of the cost of potatoes that you need to deduct to arrive at agriculture income. Then how to arrive at the business income? The sale of a final product in the sense in this potato chips. What do you mean by selling price of potato chips minus fair market value of the agriculture product? That is fair market that you have already considered here. Fair market value of agriculture product, that is fair market value of potatoes minus further processing cost. There might be some processing cost. You have to cut, you have to make the package, actually you have to process it, you have to add some spices and some other process. This is the process cost. That also you need to deduct to arrive at the PGB, that is business income. Simple. If the sale in a raw form, agriculture income. If sale after process, if the process is compulsory in order to clean the potatoes, then agriculture income. If the process is optional, cutting, it is optional. Agriculture income can be derived as from fair market value of that potato minus cost of agriculture produce. Then sale, how to arrive at the business income? Sale of final product minus fair market value of agriculture product minus further process cost to arrive at the business income. Simple. Very good. Then special rules will be applicable for tea, rubber and coffee. If I am having the cultivation of tea, rubber and coffee, I am also trading that, then some special rules will be applicable. Rule 8 says that growing and manufacturing of tea, I am having the growing and manufacturing of tea, from that I am having an income, then that income should be apportioned from agriculture income and business income. Agriculture income will be 60%, business income will be 40%. If they are having 100 rupees, 60 agriculture income, 40 business income. Rule 7b says that income from growing and manufacturing of coffee First one, if the coffee is grown and cured, only grown and cured, then agriculture will be 75%, business income will be 25%. If the coffee is grown, cured, roasted, grounded, then the agriculture income will be 60%, 40%. If it is given in the question only grown and cured, 75, 25. Along with that, roasted and grounded will be given 60, 40. The rule 7A says that income from growing and manufacturing of rubber 65, 35. So how to remember this section? How to remember this percentage? Wherever the highest rate of tax amount is given, that should be agriculture income. You can see agriculture income, the portion is very high, 60, 75, 60, 65. That 40, 25, 40, 35. Simple. Can be asked in multiple questions. Note, bifurcation should be done after claiming PGBP deductions, like PGBP means business income, like depreciation. Okay. First you have to deduct depreciation from entire income, then we will apportion that income into agriculture and business income. If the income of SSE partly from business income and partly from agriculture income, then also depreciation has to be computed on the assumption that total income of SSE is from business only. Depreciation can be deemed to be allowed to SSE. If you are having agriculture income and business income simultaneously, it is assumed that the depreciation will be assumed, this will be given, this will be allowed only for the business income, then the portion is to be made. Okay. Simple. There is one concept called very important from exam point of view. Partial integration in case of agricultural income. What do you mean partial integration? If I am having agricultural income, business income, that is called partial integration of agricultural income. In which case that needs to be computed, conditions to be satisfied. Number one, SSE should be an individual, HUF, AOP, BOI and AJP. Firm not allowed, and company not allowed, and cooperative society is not allowed, etc. Agriculture income, A means agriculture income should be more than 5,000. Up to 5,000 not applicable. More than 5,000. Non-agriculture income should be more than basic exemption limit, respectively. For example, resident, non-senior citizen 2.5 lakh. In case of new tax regime 3 lakh for all the categories of persons irrespective of the age matters, and 3 lakh in case of resident individual 60 plus, in case of 5 lakh in case of resident individual 80 plus, right? Computation of tax liability. How to compute? There are some 5 steps. Non-agriculture income plus agriculture income you have to add, and you have to compute the tax simultaneously on the total income arrived. Second step, tax. First we will see the one example. Step 1, 7,30,000 plus 3,10,000. 7,30,000 means it is a non-agriculture income. Agriculture income is 3,10,000. That is 10,40,000. You have to compute the tax on 10,40,000 by applying the appropriate rate. That comes to 66,000. Next, step 2, tax computed on net agriculture income plus basic exemption limit. If you are not a senior citizen, then the basic exemption 2.5 lakh plus agriculture income. Senior citizen 3 lakh plus agriculture income. Super senior citizen 5 lakh plus agriculture income. Opting 115 BSc 3 lakh plus agriculture income. In this case, we will assume that he is opting for new tax regime. The basic exemption limit is 3 lakh plus agriculture income is 3 lakh 10,000. 6 lakh 10,000 tax on the same is 16,000. Next, deduct step 1 from step 2. In this case, 66,000 minus 16,000 is a 50,000. Next, that step 3 should be added by surcharge if applicable. If surcharge is also applicable, you need to add that, and marginal relief also will be, we have to see. Okay. Then reduced by rebate if any. If the income is less than 7 lakh in case of new tax regime, the rebate should be seen. Resident in case only, and in case of non opting 115 BSc, then the slab rate, then if its income is up to 5 lakh, the rebate is also to be considered. Then step 4, last step is step 4 is increased by health and education cess of 4%. In this case, there is no concept of any rebate or surcharge because the income is 10,40,000, not applicability of any of the rebate section will be applicable in both the cases of one on BSc and old tax regime. Then tax liability will be 50,000. On that 4% we have to add. That's the final tax amount that assessee needs to pay to the income tax government in case of having a partial income, that's a partial agricultural income, partial business income. I hope you have understood that. It's very important from exam. From this income from problem, these will be not important from exam point of view from this chapter, but it is necessary from my side, from our class side to give a lecture on that. You can simply read once or twice, that's enough. Income from fall building. Two conditions to be set following. The risk can be satisfied. If the building is used for farming purpose, then that building is called farm building. That's it. Building should be on or in the immediate vicinity of the land. The land should be here, building should be attached here. And the concept is and the receiver of the rent or revenue from that building, the receiver of the rent or revenue or cultivator, or the receiver of the rent in kind. Kind means in terms of paddy also they have sometimes given in terms of rent. If the cultivator is not having any rent, then he can give the paddy to the owner of that building. That is meant by in kind. Should acquire it as a dwelling house or as a storehouse. They should acquire this as a dwelling house or a storehouse. This has been actually in one of the actually RTP last attempt RTP, I think. In addition to above two conditions, first two condition is very must. Should be immediate vicinity of the land building. Next, the receiver of the land on the cultivator should be acquired as a dwelling house. Dwelling, he should stay there. Or storehouse, store purpose. That's it. He should dwell. Okay. Next, in additional, any one of the basic below conditions needs to be satisfied. First one, any of them. The land should be assessed to land revenue in India. That land, the proper land, the revenue tax to be paid to the land, the municipality or etc. The land should be assessed to the land revenue. That means the actually relevant tax needs to be paid to the land revenue authority of that locality. Okay, where the land is not assessed to the land revenue India. If it is not assessed to the land revenue in that India, then it should be situated in any area which has a population less than 10,000. Remember, very important. If it is not assessed to the land revenue in India, then it should be situated in any area which has a population less than 10,000. The population is less than 10,000, then it is treated as agricultural income. That's it. It should not be situated in, the term is very important. It should not be situated in any area within such distance measured aerially in relation to the range of population as shown as below. First, we will see the second column, population according to the latest census. If the population of the locality is more than 10,000, because up to 10,000 population is there, then that land is treated as any income from that land is treated as agricultural income. If the population is more than 10,000 up to 1 lakh, then that building should not be in that situation within 2 kilometers from the municipality located. For example, this is the municipal locality. Within 2 kilometers, the land should not be there. That building, farm building should not be there. If the farm building is there in between this distance, then any revenue from that building is treated as business income, not agricultural income. Simultaneously, if the population is not more than 10,000 or 1 lakh, let's say for example, if the population is 2 lakh, okay, if the population is 2 lakh, then is the criteria is measure, then we will see the next term. Okay, next we will see the next term. So for example, if the population is more than 10,000 up to 1 lakh, but the land is situated from 3, actually in the 3rd kilometer, not within 2 kilometers. Actually, it has been situated 2 to 3, in between 2 to 3 kilometers it has been situated. Then any revenue from that is not treated as business income, it is treated as agricultural income. Okay, it should not be situated in line actually in between 2 kilometers if the locality's population is 10,000 ka zyada, 1 lakh ka actually below 1 lakh. Okay, next, if the population is more than 1 lakh and 10 lakh, then the buildings should not be situated in between municipality area and 6 kilometers. It should not be situated from the municipality area from 6 kilometers. If it is situated, then it will be treated as urban land, then it will not be treated as an agricultural income. Next, more than 10 lakh, 6 kilometers and 8 kilometers, up to 8 kilometers it should not be situated. That land should not be situated. Okay, simple. We will see an example. If the land is situated within 1 kilometer, population is 9,000, so it is to be treated as agricultural income. We have seen in the first category. Population is up to 10,000, it can be seen as agricultural land. Okay, that's agricultural income in the other way. 1.5 kilometers, 1.5 kilometers is situated within this. Population is 12,000, more than 10, up to 10, up to 1 lakh, right? Situated in this, so it is treated as business land, urban land, so not agricultural income. Next is 7 kilometers, population is 44 lakh, 4 lakh, okay. 4 lakh means second conditions. It is staying that, but 7 kilometers, up to 6 kilometers, not be there. After beyond that, it can be there. Understanding, right? Up to 6 kilometers from the municipality area, it should not be situated. In order to satisfy, in order to say that it is a agricultural income, agricultural land, agricultural farm building. In this case, it is situated in 7 kilometers from the municipality area, whereas rule says that up to 6 kilometers it should not be said. It is situated in 7th kilometer, so it is not treated as business income, it is treated as agricultural farm building, so agricultural income. Simple. Okay. Next, income, there is one note. Income arising from transfer of agricultural land situated in urban area, that is urban area, municipality, urban area, is not treated as agricultural income. Simple. If you if you are holding any land in Bengaluru locality or any Mumbai locality, it cannot be situated as an urban area, and hence it is not repeated as agricultural income, and exemption will not be given respectively. Simple. Next, the last concept of this that we have discussed in the first portion of this chapter, that deemed income and undisclosed foreign asset, undisclosed asset, the tax rate is 60%. Who's right? Remembering, right? First, section 68. Before that, give me 1 minute to drink water. Section 68. Any sum credited in the books of accounts. I have written like this, okay? Any sum credited in the books of accounts where assessees is not offering any explanation with regard to the same about the nature and sources, or not satisfactory in the opinion. He has given an explanation, but it is not having satisfied by the assessing officer, that is income tax officer. For example, in my books of accounts, I have I have mentioned one income source, but I am not knowing any of the sources, any of its nature, from where I have got. In short, it is treated as black money. That's it. But I have given explanation, but assessing officer is not ready to accept that explanation. Second category, B. Any sum or in the form of loan or borrowing, the person in whose name, for example, I have borrowed a loan from let's say X, then in whose name such credit is recorded, also not giving an explanation. That X is also not giving explanation because it is his black money I am using in my business. In that situation, I will be held responsible, not that person. Okay, because it is my fault from where I have not, from where I should assess it first. From it is from legal term, it is from illegal terms. It is from white money, it is from black money. Okay. Then second explanation offered by closely held company, that is simply it is called private limited company. Sum as share capital, share application money, share premium, if resident person in whose name such credit is recorded. For example, ABC company private limited is a company. It has raised its money from the share application and from the shareholder called Y. Y has given the amount which is black in nature. The ABC company private limited has accepted that amount. Then ultimately who is responsible? This ABC private limited will be responsible, not that Y person, because it is his responsibility, right? Because it is that the company's responsibility to assess from which it is to be collected. Okay, not satisfactory. Note that Y is also not giving a proper explanation. Note, the additional points are not applicable in case of person. in whose name, for example, if in whose name such amount is recorded as a venture capital fund. If ABC Private Limited is a venture capital fund or registered with the SBI, SEBI, then that this rule is not applicable, because they are actually they are in a child stage, right? They have to grow. They have to, to promote those of the companies. The government of India has given a relief for them. Okay. Next, section 69, unexplained expenditure, unexplained investment. If I have made any investment in some of the source, for example, black in nature, I am not in a position to give an explanation to the assessing officer. If I have given explanation, that assessing officer is not in a position to accept that explanation, then also that is called deemed income. Then the respective tax amount is applicable. As unexplained. Next, unexplained money or asset. If I am having in my authority any of the asset, bullion or shares and jewelry, which is I have acquired illegally, I have not illegally, I have, for which I have not any sources of documents, invoice is not not there. It's little, it is simply as like that, unexplained. It is not to be explained by ourselves also, and also giving an explanation, but assessing officer is not in a position to accept that explanation. Then also it is called unexplained explanation. Then appropriate deemed income. Next, amount of investment not fully disclosed in book of account. If I am having an investment, let's say for example 100 rupees, but I have shown actually 50 rupees only in my books of accounts. For remaining 50 rupees, I have not given any explanation, which is also unsatisfactory in terms of, in the opinion of assistant officer, and is that 50 rupees is also can be treated as unexplained deemed income. Okay. 69C, unexplained expenditures. If I have shown an expenditure, bogus bill by bogus parties, then dummy parties, then for which I have not an explanation from whose name it is, GST is also not there, and some of the unsatisfactory is actually in terms of, in the opinion of assessing officer, then also that need to be considered as an income of mine. That's it. Next, 69D, amount borrowed in or repaid on hundi, hundi. Any amount is borrowed on hundi, or any amount is repaid otherwise than through account paycheck. If I have borrowed or repaid through account paycheck, then this rule is not applicable. If it is borrowed or repaid otherwise than through account paycheck, then this rule will be applicable. Then amount borrowed or repaid shall be deemed to be his income, that mine income, for the previous year in which such amount is borrowed or repaid. Note, there is one note. If any amount is borrowed is deemed as, if let's say for example I have borrowed from hundi and non through otherwise than through account paycheck, actually 100 rupees. In that year, assessing officer charges me that it actually treated as actually deemed income. I have been charged for that. Then on the actually in the time of, at the time of repayment of that borrowed amount, then again I shall not be treated, that amount is not to be treated again as a deemed income, because it has been already charged as a deemed income, right? Again, actually, to avoid the duplication of the taxes, the government was bringing this point. Okay, I think you have understood this. Then tax rate applicable for deemed income, said they actually about these sections is that has been clearly mentioned in 115 BBE, that we have already discussed. A special income tax rate is 60%. Surcharge rate is 25%. Health and education is obviously 4%. Ineffective, 60 plus 25% of 60 plus 4% of both will come at 78% is the tax amount. Very huge. Very wonderful. Because if I am having 100 rupees bogus expenditures or unexplained income, I need to pay 78 to the income tax government. Remain 22 only in my pocket. Understanding? Very horrible. So I am suggesting you to have a proper resources, proper explanations for your income or any actually any of the investment. Notes for this special income, this 78. No basic exemption limit will be given. No expenses allowed. No basic exemption limit. If you are having let's say for example 1 lakh also, you need to pay 78% on that. No basic exemption limit of 3 lakh, 2.5 lakh, 5 lakh super senior citizen. No, nothing. You have to pay 78% directly if it is ordered by assessing officer directly. Second, no setup of any losses shall be allowed. If I am having any losses in other head, for example, loss from house property, then you cannot in a position to set up that losses against this income. You had to pay for 10 rupees also, for 100 rupees also, even for 1 crore also, without claiming any benefit under section basic exemption limit or any set of permission will be given. I hope you have understood entirely this chapter. If you have any doubts, please put your doubts in the comment sections. And I hope this video has made a wonderful journey for your examinations. And please press the like button and share the video to the n number of the students, and subscribe to my YouTube channel so that I will be more encouraged to do. Till then, we have discussed, and in the next class we will discuss the second chapter, is residential status. Till then, bye bye. Signing off. CA Abhijith Acharya, Abhi CA Classes. Bye bye. Have a wonderful day.